How does using a 50-year mortgage affect buying and selling real estate here in West Hartford, Connecticut? As of right now, this is not a real option. At the same time, it's something the government's throwing around. So, creating some awareness on it, talking about some pros and cons, and really diving into how it might help or not help our town is something that is good to consider, at least have an awareness of from a strategy perspective. It's a good idea. Anytime we can share information and give people all the options available in a marketplace, it only better prepares them to make good decisions based on their family's needs. So let's dive right into it. If you have any questions, don't be shy. If the question's big or small, my team and I, we're always happy to help. The first thing I wrote down I wanted to take a look at is, how much money are we really saving, right? So let's take a $575 purchase price, which was the median purchase price for the past 30 days in town. If you put 20% down on that, you have a loan amount of $460,000. At a 6.275-ish mortgage, that's give or take what we're looking at right now, depending on, credit and some obviously other factors. But you're going to be somewhere in that range as of right now. Of course, that's subject to change depending on when you're watching this video. But on a standard 30-year mortgage, your monthly payment I wrote down is $2,840. That's just P&I, principal and interest. That doesn't include taxes, insurance, anything else. That's just your principal and interest, $2,840, right? If you went to a 50-year mortgage, the payment will go down to $2,515. So it's not a drastic, savings over that extra 20-year period, but it is, $325 a month is a real number, right? And, if that's what it takes, if that's the difference for a family being able to buy or not buy, there are some strong advantages to being able to pull the trigger and buy, or at least have that option to buy. At the end of the day, someone could take out a 15-year mortgage now and have an even higher monthly payment and have it done sooner. Most people don't do 15-year, they do the 30. They'd rather have that lower payment. So it's hard to say, what most folks would do with the 50-year option available. But I do believe giving families the choice can only help them. No one's forced to do this. Someone could always take a 30-year, someone could always take a 15, depending on their financial situation. The main benefit, though, if someone is able to buy that couldn't with that 50-year, right? If that creates a pre-approval for someone who couldn't, now they're locking in a home at a certain price. And one thing that I've learned after studying real estate for a while now is there's never been a time in history from point A to point B where real estate hasn't appreciated in value over that 10 years. So if someone has the ability to lock in a home and then hold it for 10 years, statistically, they're going to be in a pretty good appreciation position 10 years from now. Obviously, that can't be guaranteed. It's a market like anything else. I'm just going off history and research. If someone's able to lock in a price here in West Hartford with that higher mortgage term, that gives them the opportunity to earn that appreciation, where if they weren't and they were just renting, they wouldn't earn the appreciation. They wouldn't have the chance at that, whether it happens or not. And their money's going towards nothing. So even if, on a 50-year mortgage, the amount of one of the cons would be the amount of money that's going towards principal in those early years for a long time is minuscule. So you're really paying down minuscule. It's still not zero. It's something. And if you're renting, it's zero. If you're renting, it's zero. You're never paying down your principal, and you don't get the appreciation. So to me, those are the two main benefits. And after you lock that in, you lock that price in, you're in the home, you're not stuck in that vehicle forever. You can always refi to a 30 or a 15 or pay the loan off at any time if financial circumstances change. So I do believe it creates a lot of opportunity for buyers and sellers, or I should say buyers, especially those first-time buyers, that didn't exist otherwise. Another benefit that I think would be interesting to see how this plays out. I think it's clear there's a benefit to that first-time home buyer. You know, if you're comparing renting versus the 50-year, I think there's a clear edge there. The interesting part to me, with the inventory being so low in West Hartford, so many families having a lot of equity in their home and maybe wanting to move, but not wanting to give up their low mortgage rate, their low 3% rate that they've gotten years ago. And I get that, you know, because their monthly payments in a certain range. The interesting dynamic that I would love to see is if homeowners who are in that category have a 50-year option, would they then take the equity out of their house, buy a new house with the 50-year option to keep that monthly payment in a more affordable range and be able to have access to that equity, whether it's for investing or putting towards the bigger home or the smaller home or what have you. So I think when I first looked at this, I thought, well, this would definitely bring more buyers to the marketplace, which could make the inventory smaller, which could drive prices up. Yes, those things can all happen, and we can talk about the pros and cons of that. You know, obviously, home values are going to go up one way or the other over the years. It's a great hedge against inflation to own real estate. The 50-year mortgage could intensify that. As I thought about it more and thought about this category of sellers who have equity and who would like to move but don't want to lose the rate, you know, I believe a lot of these homes come to the market, right? So it's just not just first-time home buyers. Now we're bringing more homes to the market that wouldn't be there otherwise because the buyer wouldn't want to lose that rate. And obviously that's not everybody. But when you take a look at both of those, I don't think either of these things spike the inventory in either direction dramatically. I think obviously there'd be a little movement up and down, but I don't believe it would be anything too significant. Our value is going to go up. Yes, West Hartford's always a desirable town. We get people who want to live here from all across the country for a variety of reasons. So that's not going away, whether the 50-year mortgage comes or goes. But the real interesting piece will be, will the inventory go up or down? I don't think it's going to differentiate too much. That's my prediction. But obviously, if this happens, we'll keep you updated every step of the way on what we're seeing and how it affects the market. You know, because by the time things get to the national news or even the big local news, a lot of times they've happened. We've seen the pattern for 6 months or a year by that point. I want to get the news out there faster. So when you're on the floor and you're buying or selling and making strategic decisions, you know things as they're happening and not 6 months to a year later. By that time, other trends are starting, right? So again, this is not something that's happened yet, something that I'm going to keep my pulse on, keep my eyes on. If you have any questions, you want to talk about this more, I'm always happy to talk. Call, text, email, and I hope this video helped.